Let's be real. You see all those videos with secret indicators and guaranteed strategies? Look, most traders waste time chasing those, thinking they're the quick fix. But here's the truth. Scalping success comes from you. It's about solid risk management, clear entries and exits, and controlling your emotions. That's why here at TradeGenius we focus on simple, easy to understand strategies. They're profitable, but only if you put in the time to master them. It's about mastering the basics, not chasing the hype. Now, let's get back to it. You know how some tricks only work in one place, right? Like maybe it's just for a kind of trading. Well, this thing we're talking about, it's different. You can use it on anything, stocks, crypto, whatever you're looking at. And the cool part, it doesn't matter if you're watching the market for a few minutes or few weeks. It works either way. Now, just to show you how it works, we're gonna look at the Bitcoin, a 15-minute chart, just to keep it simple. But remember, this isn't just Bitcoin. You can use it on anything. Okay, so let's get to the first tool we're gonna use. It's called the Optic Signal Density Cloud, which sounds kind of fancy, right? But it's actually pretty simple. Think of it as the way to see where the market might be heading, like it's about to turn around. So, to get this on your chart, go to the trading view on the top of the platform in the indicator section. Type in Optic Signal Density Cloud. And boom, it's there. Just click on that to be added to the chart. Now it's not quite perfect out of the box, so we're gonna give it a little tune up. Think of it like adjusting the focus on a camera to get a clearer picture. So you go into the settings and you see all those numbers. You gotta mess with those a bit. First, look at the fast moving average length. That's like how quickly the indicator reacts to changes. We're gonna crank that up to 100, so it's little less jumpy. Then second, a smoothing length and extra smoothing length. Those are like backup filters, making sure we're seeing a bigger picture. We're setting those to 200H. Make sure the source is closed. That just tells it to look at the closing price of each candle, and cloth type to optimize. It's like telling it to use the best judgment. And to make it look a bit cleaner, we're gonna set the cloth thickness to 0.5, so it's not too overwhelming. Finally, in the style tab, we're turning off those thick reversal things. They're just visual clutter and we don't need them. We're streamlining, making it easier to see what's really important. Alright, so we've got our fancy cloud thing going, right? That helps us see the big picture, the overall trend. But now, we need something to give us those actual go or stop signals. That's where our second tool comes in. It's called High and Low Optimized Trend Tracker, or HOTT for short. Don't let that name scare you. It's pretty straightforward. Just like before, head over to the indicator section on TradingView. Type in HOTT. And click to add it to your chart. Easy peasy. Alright, let's really break down those HOTT settings, because this is where we fine-tune the whole thing. We're tuning our indicator to the market's specific frequency. So, you open up the settings and you're in the inputs tab. The thing we're changing is the OTT period to 2. Now, what's that mean? Basically, the OTT period controls how quickly the indicator reacts to price changes. A lower number means it's going to be more sensitive, reacting to a smaller fast moves. We set it to 2 because we want it to pick up on those short-term shifts, especially on the 15-minute chart. We're trying to catch those quick moves, so we want it to be snappy. Next, we're changing the OTT optimization to 1. This is a bit more technical, but think of it as the indicator's confidence level. Finally, we're setting the highest and lowest length to 14. This is like telling the indicator how far back to look when calculating the highs and lows. We're telling it to look back at the highest and lowest prices from the last 14 periods. This gives it a decent window to see the recent price range and helps us define those HOTT and LOTT lines more accurate. We wanted to see the recent price action, not something from way back when. So this HLOTT indicator gives us a band with two lines, the HOTT line and the LOTT line. Think of them like guardrails showing us the potential range of price movements. Now here's where the magic happens, where we turn this into actual trades. First, we wanted to make sure we're looking at a downtrend. Remember that cloud we set up? We want that price candles to be hanging out below the cloud. That's our confirmation that the market's heading south. Then we wait for the price candles, which are bouncing around inside the HLOTT band to break below the LOTT line. The lower line, that's our sell signal. That's when we jump in. Now we need to think about risk. We're going to use the other line, the HOTT line, as our stop loss. Think of it like a safety net. If the price goes against us and hits that line, we get out, minimizing our losses. And for our take profit, we're aiming for twice the distance between our entry and a stop loss. So if your stop loss is say 10 pips away, your take profit would be 20 pips. We're aiming for 2 to 1 risk to reward ratio, which is a solid way to trade. We're letting our winners run and keeping our losses small. Okay, so long trades with this setup, super simple. First, make sure the price is above the cloud we talked about. That's our up signal. Then watch for the price inside the HLOTT band, and when it breaks above the upper line, which is the HOTT line, that's your buy signal. Put your stop loss at the lower line, which is the LOTT line. And aim for a profit twice the distance between your entry and a stop loss level. That's it.